Hello students, welcome to Economics of Class 10. Sushila is a 10-year-old and had the habit of saving money. She would put all her coins in a small piggy bank. When it became full, she asked her father what she should do with it. Her father said to her, "I will open a bank account for you, and you could deposit this money there." Since she was a minor, her father said he would make her a joint account holder with him. At the age of 18, she could manage her account all by herself. Sushila was all excited and went to the bank with her father. There, she had many questions to ask her father. Students, today we shall learn the topic Introduction to Banking. We shall learn what is a bank. A bank is a financial institution that accepts deposits from the public by offering an interest and lends money to the public by charging an interest from them. It also offers many other services to the account holders and the public at large. Now let us look at the functions of a bank. The bank has two major functions, that is accepting deposits and advancing loans. Let us look at it in detail. Firstly, let's look at accepting deposits. The banks accept deposits from public by offering various types of accounts. These deposits can be demand deposits and time deposits. These deposits are offered to suit the needs of the different sections of people. The banks offer interest on these deposits, and the amount of interest depends on the time period. Let us now look at advancing loans. Banks offer loans and advances to firms and their businesses and to individuals for durable consumer goods. These loans have a time period, that is, short-term loan, medium-term loan, and long-term loans. The bank charges interest on the use of these loans. Different types of loans are offered depending on the needs of the firms and individuals. Now let us learn about the types of accounts. In our lesson, we shall learn only the 4 types of accounts, basically on the demand deposit and the time deposit. Under demand deposit, we shall learn the savings bank account. Secondly, the current account. Under time deposit, we are going to learn about the recurring deposit account and the fixed deposit account. Let us look at each of these accounts individually. Let's look at the savings bank account. This account is offered to salaried people and those who would like to regularly operate this account. This account is offered to encourage people to save money. A minimum interest per annum is offered by the bank to the account holders. However, a minimum balance is necessary to be maintained in the account. This is a demand deposit, as the money can be withdrawn whenever the account holder needs it. However, there are restrictions to the number of withdrawals. We shall now look at the current account. It is an account mainly offered to businessmen that have a large number of daily banking transactions to perform. Since there are no restrictions on the number of transactions carried out, this account is a non-interest account. However, the account holder must have funds in the bank account at any given time. This is also a demand deposit. Thirdly, we shall look at the recurring deposit account. It is offered to those who regularly deposit into the account at regular intervals, example, monthly, bi-monthly, or yearly. This account does not allow the account holder to withdraw from the account. It has a lock-in period for a specified time mentioned by the account holder. Recurring deposit accounts are normally allowed for maturities ranging from 6 months to 10 years. These accounts can be renewed. They receive an interest per annum higher than the savings account. It is called a time deposit as no transactions are allowed till the maturity period. However, the bank may allow closing the account before the maturity period. Lastly, we shall learn about the fixed deposit account. A lump sum is deposited into this account for a fixed term period. After the maturity of the fixed period, the money becomes available to the account holder. The period of the fixed deposits range from 7 days to 10 years. The account can be renewed after the maturity period. Fixed deposits receive the highest interest as the entire amount is locked in for a period of time. The senior citizens get a higher rate of interest, which may change as per the directives of the RBI. This is a time deposit. So students, which account will Sushila open? I think you've got the answer correct. She will definitely open the savings bank account. Lastly, today we shall learn about the financial instruments. An instrument used to transact any financial activity is called a financial instrument. For example, a checkbook. It is a book of checks which the bank gives when an account holder opens a savings account. It is used to pay amounts of big sums to persons one owes money to. Secondly, the pay-in slip. It is a book that contains deposit slips used to deposit money in the account of the account holder. It also keeps a record of the money deposited through a counterfoil. Next is the debit card. This is a card given by the bank to the account holders for electronic purchases or to transfer money from one account to another or to withdraw money from an ATM. Next, we have the credit card. This is a card given by the bank to the account holders to purchase goods and services through a credit offered by the bank. The amount can be paid later to the bank. It is a type of short-term borrowing. The amount of the credit is stipulated by the bank. The account holder must pay the amount within the stipulated period of 30 to 50 days, failing which interest will be charged. And lastly, the fixed deposit receipt. It is a receipt given by the bank when an account holder opens a fixed deposit account with the bank. It acts as a proof that the amount has been deposited for a fixed period and will be redeemed after the period is over with interest. It can also be used as a collateral. Let's recap. In this video, we have learned about what is a bank. We learned the functions of a bank, that is accepting deposits and advancing loans. Then we learned the types of accounts, classifying mainly on demand deposit and time deposit. Under demand deposit, we have the savings bank account and the current account. While on the time deposit, we have the recurring deposit account and the fixed deposit account. And lastly, we learned the financial instruments like checks, pay-in slip, debit card, credit card, and fixed deposit receipts. Do open your account if you do not have one. Thank you.